chairs are just sitting on right now.
Hello, everyone, and welcome back to One Chair. As a short reminder, none of what you will hear is financial advice, and this podcast is for educational and entertainment purposes only.
Hi, everyone. So in this episode, we will be looking at the preferred equities from STRD. And in the second part, we will be looking at Metaplanet's new plan, the 555 million share plan that they announced. And with that, I think we can already start on the preferred equity side with a short explanation of what it is.
Yeah, exactly. Before we go into the specific instruments that STRD has issued, what is a preferred share? Basically, it's a hybrid instrument that is part equity and part debt-like. And what's important to understand about this instrument specifically is that the investors get the priority over common shareholders for dividends, payments, and for liquidation. So it sits higher in the capital stack than the common equity. And it's actually between the convertible bonds that we discussed last time and the common share. And we'll see that here on a graphic in a few minutes, but that's important to understand for the risk structure of those instruments. And usually it's shares that don't have any voting rights or only limited voting rights. And often they pay fixed dividends like a bond coupon. And some of those instruments can be converted into common shares at a certain strike price, or they are redeemable at the company's option. So this is just for the general understanding of preferred shares. But now let's dive right into the preferred shares that STRD has issued. They have 3 different products on the market so far. 2 of them were issued earlier this year. They've been on the market for a few months already. And STRD, the last one, actually was just announced last week that they were going to issue that one. So we can have a look at the differences. And Yves, maybe if you want to start.
Okay, so as Quentin mentioned, so they're all more senior in the capital stack than the common share. So the one that sits on top is STRF. And that's, as Saylor put it, the crown jewel of STRD. And this one, if you look at it, is the perpetual preferred stock. It has regular dividends of $10 per year. It is relatively low on the volatility side. It does not convert to the share, right? Following that, you have on the second part STRK, which is the convertible preferred stock. And here the dividend that is paid on a yearly basis is $8 per year. It is slightly more volatile. So 10 STRK convert to 1 MSTR share at $1,000, right? So I would say here what would be really interesting is in the future, once MSTR hits the $1,000, you will probably see a lot more volatility on it as well.
STRK will start to trade like MSTR as the share of MSTR hits $1,000 and more. And at that point, it will make sense for investors to convert their STRK shares into MSTR shares above $1,000, right?
And then we have the last one that was just announced, STRD. This is a perpetual preferred stock, again, similar to STRF, so not convertible. Again, the dividend is $10 per year. However, it sits lower on the capital stack, so the risk profile is a bit higher and the volatility as well. What is really interesting with this one, especially for the common shareholders, is that the dividends may not be paid if the board decides not to. And this would happen in like very specific scenarios during probably the depths of a bear market where STRD cannot pay any dividends. It is very unlikely, however, to happen. Saylor already mentioned that this is the tool that they would use to defend the 1 mNAV on the share on MSTR.
Yeah, and maybe to add to that, I think this is an important point and something that in the last weeks has been heavily debated within the MSTR and Bitcoin community, right? Is in case of a bear market, we saw in the last episode what MSTR is doing by issuing their own shares to buy more Bitcoin and being accretive to shareholders in that way. And they can do that because the mNAV is above 1, as we saw last time with the example. Now, in the depth of a bear market, if the mNAV was to be compressed towards 1 or even fall below 1, then this is something that strategy could not do anymore, because the share issuances would not be accretive anymore. And the debate that was going around here in the last weeks is, what should strategy do in case their mNAV falls below 1, and some were of the opinion that the best thing to do would actually to sell Bitcoin to buy back their own share, because this would be the same arbitrage that they're doing when the mNAV is above 1, they could do in reverse, right? Because it would mean that their actual Bitcoin holdings is worth more than their share, so their share is undervalued, so they could sell the Bitcoin to buy more share. But that's not what they want to do, and that's certainly not the right messaging for a company like Strategy to do, to start selling Bitcoin, especially thinking that if the mNAV was to trade below 1, it would probably be in the depth of a bear market, and the Bitcoin price would be relatively low, right? So this trade offering is super interesting, because it would allow them to buy back their own shares without having to sell any Bitcoin, and defending this mNAV of at least 1 through that.
Yeah, selling any Bitcoin would be probably a very bad signal to the market. I think a lot of people would lose a little bit faith on the whole strategy. And I think one of the reasons that Saylor came with this stride was because it was criticized, or it's been criticized, that the other preferred equities have this dividend, and a lot of people are, where does the dividend would come from in case of a bear market, right? And here now with Stride, there is a tool that can be used in case that the bear market is that bad that they cannot issue dividends, or that they would be able to issue more preferred equity that is not using so much dividend, let's put it that way. Another aspect that I would like to mention here actually is even if you look at the dividends in general of these instruments, as we see it right now, it's still under 300 million USD worth, and that's basically like 1 week of ATM on the common share on a bad week. So it's really not, it's insignificant for strategy, right? So all those bears that are coming with the FUD on the dividend, I think they need to recalculate what they're looking at, because it's small amounts right now. Obviously, they have ATMs on Strike of 21 billion, so that's going on. So it's going to obviously grow. You have 2.1 billion on Strive, and probably 1 will come also on Stride very soon. So these dividends will grow for sure, but as it stands today, that's quite insignificant.
Yeah, and the more different preferred shares that they put on the market, the more options that they have, right, to pay those dividends in the end, because they can issue any of those shares, whatever are best in the current market conditions, to pay those dividends, right? So they can even issue more of the shares of Stride to pay the Stride dividends, right? Or issue a common stock to pay the dividends, or Strife or Strike. So they have a lot of options, and start having more and more of those options. And it looks like, or the thinking is that even in a bear market, they would be able to issue those preferred shares. On the common equity, it might be a bit more difficult, right? Because the prices would already be under a lot of pressure, and issuing more shares to the market would increase the pressure on price of the common equity and compress the mNAV. But on those preferred shares, because there is a dividend on it, there is kind of a floor of price, because if the price of those shares fall, let's say below $80, suddenly you get 12% interest on those instruments, and so probably there is a floor between $60 and $80 that it would not fall below that, given the high dividend payment that would come with those instruments. So there will be demand, and the more the price falls, the more the demand will be there from fixed income on those products.
Ben Bergman calls them self-healing instruments, because as they fall, then people start picking them up because the yield is increased. I think that's going to be super interesting to see in the bear market how those instruments perform, because up until now, obviously, we've been in good times or positive sentiment, on a positive sentiment period, and obviously they've performed quite well. But as soon as the bear market hits, it's going to be quite fascinating to see how these instruments perform.
And the performance of those prefers will probably be more related to the central bank interests than to Bitcoin bear or bull market, right? Because with higher interest rates by central banks, those instruments are maybe a little bit less attractive. As interest rates fall, those instruments become more and more attractive too.
And also, I think it's going to be interesting for some institutionals as well to pick this up, especially from a again insurance perspective, for example, and on the more risk averse institutional investors, right, where they can get a pretty high yield for something that is quite or not so risky. Let's put it that way, because they're backed basically by what now 62 billion worth of Bitcoin, and that's also going to increase. I think Saylor mentioned it in the last presentation. So Saylor and the strategy team actually even had a presentation on Stride, which is actually something that we should also mention. I think it's really cool to see a company present their instruments and do a whole presentation for 1 hour and communicate how it works in detail and how it compares to their other instruments. So I thought that, again, that was a masterclass of communication to the market participants, not just the shareholders, but whoever is interested in those preferred equities.
Definitely, and we can link this in the show notes as well, this presentation, for those that are interested. It's a 1 hour, super interesting on Stride specifically. And speaking of, we have some slides here from that presentation that we want to get into. We could start doing that now by maybe with our next slide here on the capital structure of strategy specifically. And we already alluded to some of it. But here are the details of which instruments sit where on the capital structure, from top to bottom, with the top being the least risky, or the ones that would get the highest priority in case of a liquidation of strategy. So you see the convertible bonds at the top, and then, as already mentioned before, the STRF, STRK, and STRD instruments. And then you have the common stock of MSTR that is backed by their Bitcoin holding here at the bottom of the pyramid. The slide, so from the presentation of Stride that we'll link in the show note, is the next one here to explain this new instrument and how it works and how it makes the whole structure of strategy stronger, right? By improving the rating of the instruments that are above it, and adding leverage to the common stock.
And what's going to be interesting to see, and again, this is something that has been mentioned a couple of times or various times now by the MSTR True North crew. We will also link their X account in the show notes. They mentioned that through all of these preferred equities, suddenly you also have a yield curve on Bitcoin, basically, that's being created. And I think that's going to be also quite interesting to see how they trade, because as you see, STRD and STRF are very similar in many ways, and they're probably trading about the same price right now, or quite close. So either one is too expensive or the other one is too cheap. As these equities or preferred equities mature, we should see the price reflect the reality or the real price.
Which is relative to their risk, right? So
exactly.
STRF and STRD look very similar, but one is a lot more risky than the other.
Absolutely, yeah.
So it doesn't make sense that they trade at the same price.
I mean, also another thing that we haven't mentioned yet is, so Sailor put STRD and the initial offering was 250 million. And they actually managed to upsize that to 1 billion. So that's 4 times the initial offering.
Yeah.
I think it's going to be a preferred equity that's going to be trading quite well in the near future. So the next slide that we're presenting now is also part of Strategy's presentation of STRD. And here you can see the seniority and volatility of their different instruments. What I think is really interesting is how they present the volatility, where you go from the least volatile to the most. So STRF being the least, followed by STRD, and then STRK would be more volatile, and finally MSTR, so the common share, is the most volatile of them all. It makes sense due to the aspects of each instrument.
Yeah, so maybe just to add why the volatility is higher on some of those instruments. So it's clear the MSTR, the common stock, is basically a levered Bitcoin play. So that's why you have the volatility of Bitcoin times 1.5 to 2. And on Strike, you have the volatility because there's a call option on MSTR, with the fact that Strike is convertible into MSTR shares at a certain strike price. So that's why you have the higher volatility there, compared to Strife and STRD, where you really have a lower volatility. Then we found a slide on X that thought it would be worth sharing here. We had Jeff Walton on a podcast last week explaining the fishing strategy or the way MicroStrategy uses different instruments to fish in different depth. Someone actually created a very nice slide on that we took over here. So a big thank you to David J. Pete for creating this slide. And make sure to follow him on X.
Maybe one thing I would like to start on this slide, and that's something maybe we could have mentioned, is so Sailor is really focused on the fixed income market. So he's trying to get 1% of the fixed income market, and that would be an equivalent of 3 trillion. And that is why he's coming with all these preferred equities, right? Because now he's trying to catch as many fish, as you can see here, as he can to get as much of this market as he can. That's just an interesting way to see it, I would say.
Yeah, just to add on this slide, it's interesting. It's an interesting picture because you see the different depth of the ocean here in that case, or the different risk appetites of different players in the market, right? With the highest level being the riskiest, or the players with the highest risk appetite buying the common equity, and then you go into those fixed market instruments, and it's the reverse of the pyramid we saw at the beginning, right? With STRD being the most risky, then Strike and Strife, and all of them going for different market participants with the target to bring in at the end as much capital into Bitcoin as possible through those instruments. And that's what we mentioned at the very beginning of our podcast in the intro, right? What is the value added of those Bitcoin treasury companies? And specifically here, Strategy is the financial engineering that they do, and the different ways that they find, the innovative ways that they find to get capital into Bitcoin by creating new products that attract investors that would never invest in Bitcoin otherwise.
And I think that what's really cool is that there's two sides to this, right? So Sailor is attracting different kinds of players, different kind of investors. And on the other side, he's also creating instruments to protect or create a moat on the company, especially when the bear market comes, right? So you have these instruments that will probably play a bigger role on times when it's hard than when it's, as right now, like quite optimistic sentiment. I suspect that Saylor will keep coming with more instruments to reinforce strategy in general. I think because every instrument that you see here has its part in the bigger scheme, and that's really fascinating to see how it evolves. And you can see that Saylor is also paying attention to the investors, because there's been some criticism around him hitting the ATM too hard on MSTR. So now you have these other instruments that come and that back up the accumulation of Bitcoin without touching too much the common share ATM. And you have as well all the people that have been criticizing strategy for coming with instruments with high dividend payments. And now you have STRD that allows, in case of issues, to cancel those payments. Obviously, again, low risk or low probability of this happening. So there's all these defense mechanisms that are being put in place right now. It's just quite fascinating to see the financial engineering that's going on strategy side. And I would be curious to see how the other players in the market do, right? Because they're the only ones that have these types of instruments right now. So even a Metaplanet that has been very meticulous in their accumulation and have been very aggressive, they don't have those mechanisms on a bear market. At least I'm not aware of how they would deal with it.
Yeah, that's a very important point. And going back to risk management or risk profiles of those companies, right? We saw last time that their debt levels compared to their assets is low, but that's not the only thing. They are prepared to weather a bear market with those instruments, where the demand would still be there when it's not necessarily there on the common stock. And it's the only Bitcoin treasury company today doing that.
I mean, just maybe one thing to point out. I mean, probably some of the other players, like let's say Assembler, they have a profitable business, right? So they're generating cash flow. So in a bear market, they're still fine as well. So that's the other side for these companies. But if you're a pure play like strategy, then you need to protect yourself. And
if you're taking on debt to buy Bitcoin, if you're leveraged, then you need to have those types of protections. Yeah. But true, you have a lot of companies or companies like Tesla or Block Inc. or Coinbase that put part of their treasuries in Bitcoin, but have a completely separate business too. They will be fine in a bear market as well, right?
For them, I would even consider that their stack of Bitcoin is almost insignificant compared to their main business anyway. So, but yeah, that's maybe a point to keep in mind when you're looking at those Bitcoin treasury companies, right? So what are their defense mechanisms should Bitcoin start to have a downturn? That's really important to always keep in mind, I think.
And maybe something to add here, still, it's great instruments put in place to protect the company strategy, but it's also a great thing for the world at the end of the day, because those fixed income markets, it's everyone's pension funds and everybody's future payments basically, and to have very attractive instruments backed by Bitcoin. I mean, if you're a Bitcoin believer, you also have to like the fact that more and more people will get exposure to instruments that are backed by Bitcoin, and where you have super attractive yields and very strong instruments at the end of the day for the fixed income market.
I mean, strategy is basically repricing the yields in general, I would say, because exactly, I'm pretty sure that all those institutional investors, once they start figuring out what's going on, they're gonna start ramping up their accumulation of these preferred equities to start outperforming their current portfolios, right? And also their competitors.
Yeah, absolutely. And just to go back to the slide here is on the right side, you can see who Pete thought the different instruments are for. And we can get into a bit of more detail on that, on those fixed income instruments. Who are those different instruments attractive for? And where do we agree and where do we disagree? Maybe you want to start on that?
Yeah, absolutely. So let's start with the bottom, I think, because I think it's the clearest one. So STRF, here you see it's lowest risk. It's meant for pension funds and insurances. I think we can completely agree. Like all those institutional investors that have a mandate to keep their investments on a low risks, they will definitely want to buy this. So that's absolutely correct. Then we have STRK, where it's more for high yield funds or balanced portfolios. Again, I think here we can agree, especially as a retail. STRK is very interesting. I think that's something we want to also go a bit into detail after this. And then we will have STRD, where it's a higher risk already. Again, we have retail traders, and it would also be for Bitcoiners looking to have a yield. However, I would not classify it as a high risk product.
Okay, so we prepared a little table for this one as an explanation of what the opportunity is with Strike specifically. So as a reminder, Strike is the preferred stock where 10 shares are convertible into MSTR common stock at a price of $1,000. So you have this embedded call option. And if you look at the prices of the different equities here as of June 9th, you have the MSTR stock price at $374 and the STRK trading at $105. So if you were to just generally calculate what your yield could be on this product, if you bought the 10 STRK shares, you would have to pay $1,050 and you would get a yearly dividend of $80, right? It's $8 per share of Strike that you get. So the yield on that would be 7.5% approximately, which is not bad, right? It's already quite a high yield on this product. But if you take into consideration the convertibility into MSTR stock, then I didn't know how to call it exactly, but I tried with the call option premium on Strike, right? Saying that actually 10 Strike shares are worth one MSTR share, which is currently trading at 374. So the remaining value of Strike that you have is $676. And if you calculate a yield on that, it's actually you increase your yield to almost 12%, right? So it's an interesting way to look at it if you both want to have MSTR upside exposure and a high yielding product to look at Strike this way, right? And that the yield is actually a lot higher since part of the value of Strike is actually in the MSTR stock itself.
Yeah, I think it's an interesting way of saying it. To be honest, that's probably the first time I'm thinking about it in these terms. But that's true that there's this free embedded call option that comes with it, and based on these calculations, yeah, the yield suddenly jumps quite a bit, right? So it's definitely very appealing, especially to retail traders, in my opinion.
The caveat here is that, of course, this value from MSTR only is convertible if MSTR actually gets to $1,000 per share, right? As long as it stays below, you don't have any way to convert, and this value may be lost, right? If MSTR never gets to 1,000, then you can't really make the calculation this way.
Yeah, but two things here. First, if you believe in the Bitcoin thesis, right, I don't think that's an issue, or there wouldn't be an issue reaching the 1,000 mark on MSTR. That's number one. Eventually, and especially that's the second point, is STRK is perpetual, meaning it doesn't have any expiry date. So it's really a free call option without an expiry date, which I think is pretty incredible when you really think about that.
That's a very good point.
Yeah, and it's what is also really interesting when you think about those preferred equities coming from strategy is that these are instruments that have been created by, to some extent, AI, right? Saylor has been prompting ChatGPT like a madman, as far as I understood, to come up with these solutions and just give these to his lawyers to finalize. But these are instruments that have been prompted through AI, and they're quite novel in many aspects. So that's one thing to keep in mind, and I expect that they will come with some other interesting tools.
Yeah, exactly. I mean, what we presented today is the status quo as of June 2025. 2 weeks earlier, we wouldn't have Stride on the picture, so it's evolving, and it's evolving quickly. So we might have to redo one soon when the next product hits the market.
Exactly, and there's going to be flavors for all types of investors as we saw just before, right? So I expect that there will be many more investors coming in the space, and that's actually a great way to bring more people into the whole Bitcoin ecosystem in general, right? Because some investors that have been so focused on specific instruments, they might start to be looking at this and asking more questions, not only on these instruments, but going a bit further down the road and looking at Bitcoin as well. Well, they have to do their due diligence, so they should look at Bitcoin. All right, so maybe to just stand up on the preferred equity talk. So here we're showing the slide of Jesse Myers, where he shows all the different types of investments there are and their values. So you have Bitcoin with 2 trillion, gold with 16 trillion, art with 18 trillion, cars and collectibles with 6 trillion, equities 115 trillion, real estate 330 trillion, bonds 300 trillion, and money 120 trillion. We will obviously be putting the slides in the show notes, but just so that our listeners can follow. And as I mentioned before in our talk, Saylor is aiming 1% of the fixed income. And what is 1% of the fixed income? Here you can probably have two different kinds of thoughts. Either it's the bond market, which is 300 trillion, so that would be 3 trillion worth, right? But there's also the real estate. I guess to some extent that could also be considered fixed income, right? So suddenly that jumps to 6 trillion. I don't know, Quentin, what do you have any thoughts on this one?
Yeah, big opportunity. I mean,
Yeah.
in contrast to the converts, right? Which are for a very specific set of investors only. We mentioned volatility arb traders, right? That's it is an interesting market, but compared to the fixed income market, it's tiny, right? So here the opportunities with those preferred shares are almost endless if you look at it this way. And especially looking at the bonds, that's the main value of bonds, right? Is the yearly dividends that you get from those. And real estate, maybe you can't take the whole chunk as fixed income, but definitely, I mean, a lot of investors buy real estate to get fixed income out of it, right? So by putting it on Airbnb but also the pension funds building new buildings and with the targets to get a fixed income of it. So I don't know how big it really is, but a big chunk of real estate probably also could be considered fixed income opportunity.
And when you start thinking in those terms, right, I believe it's some of those guys, again, the MSTR True North crew, they mentioned that it's easier to have a preferred equity with some dividends than have real estate where you have all of these issues of the real world. You know, there's so many risks that come with real estate that it might not be worth having all of these risks when you have a preferred equity generating a yield of 8% or 10% on the instrument. So it's going to be interesting to see this shift happen.
And you could even argue, now that we're talking about that, in the equities portion, right? You also have probably a chunk of it that are high dividend equities that could
Absolutely.
also be disrupted or put into those preferred shares.
Yeah, exactly. And I think that's going to be also absorbed.
Okay, then now let's shift to the breaking news of the week with Metaplanet. And Yves, you have some input on what happened here, and just take it away.
Yeah, so we haven't talked much about Metaplanet up until now, but I think it's worth mentioning considering their huge plan that they came up. It's such an aggressive plan that it's actually more aggressive than the 42 billion plan that Saylor originally came up for strategy back in the days in October 2024. Maybe just to quickly go one step back and explain what Metaplanet does. So Metaplanet is essentially using a similar strategy with an ATM-like vehicle, which is their moving strike warrants. And we don't want to go into detail here, but in an upcoming episode, we will. So that's one way they acquire Bitcoin, but they also have a second, more advanced strategy, if I can call it that way, is that they sell put options in the market. And this one is actually super interesting because they're actually acquiring additional cash flows through selling those put options. But even if Bitcoin falls to this certain level and they have to buy those Bitcoins, that's their strategy to acquire more Bitcoin. So it's a win-win situation, and their aggressivity is seen through this. And I think that's why a lot of investors like Metaplanet, right? Because they're actually, to some extent, yielding additional, or they're getting additional yield through this strategy. And here we can share one of the slides of their presentation, where their plan now is to basically acquire 1% of the whole issuance of Bitcoin, so 210,000 Bitcoin by the year end 2027. And their target by 2026 is 100K Bitcoin. And currently, just to put this in perspective, they're just having 8,888 Bitcoin. That's a very aggressive plan, but it was taken very well by the market. So we saw on the day the stock trades up 25 up to, I think, 30% or more on Friday. That was well taken by the market participants. It would be quite interesting to see how they progress throughout the year. Obviously, Metaplanet has been super aggressive on their buying spree. Again, maybe the one thing that we would reflect on based on our previous discussion is what will Metaplanet implement next in order to have a bit more optionality in terms of when there's a downturn in the market, right? Because they don't have any preferred equity like strategy does as of today. Obviously, as long as the sentiment is positive, I think that their strategy is very fruitful, but there's still a risk that they might not be able to sustain a bear market, right? So that's going to be interesting to see.
Yeah, definitely. Let's see if they are able also as strategy to get products out to the market to make them bear market proof. But so far, super interesting trajectory that they're on. Just to give some numbers here, also before they started their Bitcoin treasury strategy, they had a market cap around 20 million. As of now, they're at 5.5 billion already. So you can see that almost like strategy, they're having an immense growth. It was the best performing stock last year, right, of any stock worldwide. And this year they're also on an incredible trajectory in terms of growth. But then again, it's we've been in a Bitcoin bull market now for the last 2 years, so it's, I would say, easier in that market environment. And let's see how this one evolves.
All right. So with that said, I think we can go to final thoughts before we wrap it up. Quentin, do you want to start?
Yeah, so my final thoughts for this episode is that you can now see what we meant in the earlier discussions about the Bitcoin treasury companies engaging in financial engineering. And those preferred stock offerings are a clear expression of that. And it means that the financial world is now accessing Bitcoin-backed fixed income. MicroStrategy's preferred stocks are leading the charge with that. And it's actually the beginning of a Bitcoin native capital market with structured yield products backed by digital scarcity instead of fiat. It's kind of an attack to the traditional fixed income market, and not by junk bonds or fiat debt, but by instruments rooted in hard money for the very first time. And for the market, it has been pretty unspectacular so far, and the market now needs to absorb and price these new instruments. And this is a process that is only just beginning. But what is clear is that MicroStrategy made the first move on that, and probably others will follow fast when they see that the market is actually absorbing those instruments, and when we start seeing that the ATM issuance of those preferred stocks starts to increase, and the liquidity gets deeper on those.
Yeah, so on my end, I think one of the things that you mentioned very well is this evolution of the capital markets, right? That's also one of my takeaways is capital markets are evolving in this direction, and as you say, rooted on Bitcoin. It's quite fascinating to be in the middle of it and witnessing this transition to the new financial era. And what is also quite captivating, at least for me, is that back when I was thinking of Bitcoin, before witnessing strategy added to its balance sheet, I always thought that the transition would be probably a bit more volatile in the sense that there would be a lot of inequality between the people who have Bitcoin and who don't. Now I think this might be more of a smooth transition because as the capital markets absorb all of these instruments that are being issued backed by Bitcoin, a lot of people are getting actually exposure to Bitcoin, right? So let's also think not only in terms of preferred equity, but I think strategy entering in those indexes like the NASDAQ 100, so QQQ, or potentially very soon in the S&P 500. Suddenly all those people who have pension funds who are exposed to those indexes will also be exposed to strategy and therefore to Bitcoin, right? So there will be this transition, and it won't be as brutal as I initially thought. So I'm quite optimistic to see this happen as we speak, and I'm really looking forward to see all those other companies who will follow suit. Obviously, as we mentioned in the past, right, there might be risks, and some of them might blow up. But it's a very positive development for the whole of the capital markets in general, and I think for individuals as well. So really super excited to see what the future brings on this respect. As we've seen, news keeps piling up very quickly on a daily basis.
Those companies, at the end of the day, they enable more Bitcoin exposure to everyone, basically everyone who's invested in any capital market at the end of the day, right?
Yeah, and it's a shame that I think a lot of people are overseeing this, right? They think, oh, it's just another Ponzi scheme, and they're being very negative. But I think overall it's a positive for the entire world. I think we can wrap it up here. Thanks for listening, and yeah, see you on the next one.
Bye, everybody. See you next time.
How many chairs are you sitting on right now?